If you want
downward
the
pressure
best
on rates, we're saying
explanation for
to
why
the end of
mortgage
the
rates are
year,
where they're at,
and
stay tuned.
that would be
Because if
that would be
Paul
nice if we were
knows,
seeing
you'll know.
some.
And he's about to tell you.
So really quickly to touch on why I talk about the economy and why it is important. And this is overly simplified, but I tried to add enough detail in order for it to make sense. So why do we talk about the economy? It is because the economy impacts the bond market. Mortgage-backed securities are part of the bond market. Mortgage-backed securities are the reason why mortgage rates are where they're at, because most mortgages, when you hear conforming mortgages, those are repackaged into giant blocks of these MBS products, and they're sold on the open market where they're competing with a variety of other products, a variety of other bonds, which are debt instruments, and then also including the 10-year treasury. All right, so you look at the major components of the economy, and you have employment, you have inflation, retail sales, manufacturing output, industrial production, and then the economy both influences and is influenced by Federal Reserve policy. And Federal Reserve, what are the levers they have to impact things? It's the federal funds rate, which we talk about every meeting, whether they're going to raise it, whether they're going to lower it, whether they're going to keep it the same. And then they have quantitative tightening, quantitative easing, QT or QE. And what that is, basically quantitative easing, they're pumping money into the economy. Quantitative tightening, pulling money out of the economy. Examples of QE, which I touched on before, is during the pandemic, they were buying billions and billions and billions and millions and billions of dollars worth of 10-year treasuries, primarily, and mortgage-backed securities. And what that did is it artificially pumped a lot of money into the economy, most specifically the bond market. And if you have the biggest dog on the block, which is the Federal Reserve, buying up massive swaths of these products, then you don't have to offer quite as high a rate of return in order to get these products sold. And that's why we saw the rates drop very low. Then we also have, more impactful than it has ever been, is tariffs and trade policy. Because the tariffs are so extreme and what's been proposed is so extreme, those can also have an outsized impact in what is happening with all of these things. Those all go into the bond market. If you can sell mortgage-backed securities at a lower rate, then you can offer lower mortgage rates, because there has to be a spread between the mortgage rate and the rate offered to investors. And that's how we end up with the mortgage rates we are at.